Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Apple report for Wednesday, May 3rd, 2023. Let's jump into the charts, and then I'm also going to encourage you to please click like if you would. If you haven't already, please click like. It helps us out a great deal in being found. And become a Wicked Stocks YouTube subscriber. You'll be provided notification each and every time new content has been uploaded. Daily Apple, daily Tesla report, to name a few. And also check out wickedstocks.com, where we offer a full assortment of daily and weekly video analysis, just like you see in Apple and Tesla. Triple Q analysis, SPY analysis, both on a daily basis, weekly S&P 500, NASDAQ 100, long bond ETF, the TLT, as well as two individual stock picks every single week, all for $47. And we offer a 5-day free trial. So you enter the payment gateway, you have 5 days to say whether you like it or not. You can bail at any time during that 5 days and you're not charged. Okay? So bottom line, this what had been an objective or considered attainable at some point this year when we tested the 120s, low 120s in January, the low 170s considered in reach this year, is now being tested. I could go back and say how that became a 3 to 5 month target above this channel top back in February, and then a 2 to 3 week objective above the Fibonacci level at 160.49, and we are here now. This is a significant zone of resistance, pretty much summarized on this weekly chart as 171.35. But I could go through a lot of daily chart stuff, all in the same vicinity. Channel top at 171.82. I'm sorry, 171.18. I don't even have it shown here. 171.45 is a long-term trend line. That's all in the same vicinity. So I'm just keeping it simple. 171.10 on the daily chart, 171.35 on the weekly chart. That is your area. We've pushed into the 1% zone. We haven't tested either point, I don't think. Bear with me. I'm just confirming. No, 170.45 is the high so far this week that was put out on Monday. The 1% zone, as you can see here to the right, is 169.63. So we have essentially tested it. Now, I do have for the day, and I could jump into that right now. I'll just mention that the high settlement price last Friday is the highest this stock has closed following the January low. I have it as a session containment level. I think it may well contain daily buying pressures. It's hard to say. I could have called it intraday resistance, but given the fact that we fell off, did we close below Monday's low of 160? Yeah, I think we did. I do record these within minutes of the closing bell. I don't get an official settlement price, but we did close, I think, below Monday's low, which is the high session. So that in itself is a sign of weakness. So I'm a little bit more confident with 169.68, the high settlement price from last Friday, as a level that may well contain daily buying pressures. If you want, you can call it intraday. In other words, psychologically, I think it keeps it a little bit more nimble. It is Fed day after all. If we push through 169.68, I do think that 171, take your pick in the 171 handle, right? 171.10 to 171.35, long-term resistance in reach if we push or open today. I don't see us opening if we push through 169.68. Now, downside today, I still have 167.63, which did contain Tuesday's selling pressures. Nothing more than the high settlement price from a couple of weeks ago when we rallied to this point and then fell off for a week. It is still there. If we violate 169.63, then I'm expecting 165.72, which is nothing more than a downside 5/8 Fibonacci over the last week of trade from the low that occurred last week against the high that was put out on Monday. Downside 5/8 is 165.72, not also far above or off the mark for the high of the low. There's a few things going on in the 165 handle, so there's precedent for it to hold for the day, perhaps. Now, if we do a break or open below 165.72, we just might test 162.79. And as that phrase comes out of my mouth, I don't think that is likely today. Here's what I think could happen is if we close today below 165.72, which is right about here today, then we should tomorrow test 162.79, which can contain selling through next week. And from here, we can rally back into the low 170s. So we've tested resistance. And I've been mentioning how once we push into this zone of resistance, you could consider buying 162 out of the money puts. I've also mentioned how you could consider buying, 154, for instance, out of the money puts. These numbers are changing every day. Or 144 out of the money put. So we've tested long-term resistance. I'm going to say that 162.79 is likely now by the end of next week. So whatever that means to you, buying 163 out of money puts that don't expire for at least a week. And I will also say that the 153.82 formation is in reach over the next couple of months or sooner. A couple of months allows this market to bottom out at 162.79 and rally back into the low 170s for a retest of long-term resistance. But if we sooner than later close below 162.79, then we're in the sort of the 2 to 3 week category for expecting 153.82. So you could reach for 154, 155 out of the money puts that don't expire for at least a couple of months, and you may reach your target over the next 3 or 4 weeks, perhaps. And finally, obviously, 144, 145 out of the money puts over the next 3 to 5 months. I'd go 6 months out on that out of the money put acquisition. And this is all realistic right now, holding below this long-term resistance area. Once again, for the day, if you look to the right, 165.72, 5/8 downside Fibonacci, in reach today below 167.63, able to contain session weakness at 165.72. And if we close below 165.72, I would expect a test tomorrow of 162.79 where we could bottom out through next week. I will also say that if we test 162.79 over the next few days, you could then, once again, reach for, if you're a short-term options trader, reach for those 170, 172 out of the money calls that don't expire for at least a week. It is in the low 170s, though, where you can play the bigger picture. So for those of you who trade longer term, if you own Apple, you may consider liquidating until we get up and over 171.35. And if we do close above 171.35, it does need to be by a 1% margin. This week, 173.06 or higher. I don't see that today. But later this week, as we move into Friday, over the next few days, it is certainly possible. If we close Friday out at 173.06, or higher, we enter another phase of longer-term buying that I would expect to yield the 182.94 all-time high from January of 22 within probably 3 to 5 weeks. And over the next 5 to 8 months, inside of a year, I would expect this rising channel top at 217.40. And so if we close above 171.35, liquidate all those puts that I mentioned a couple of moments ago, reach for the 183 calls that don't expire for at least a couple of months, or you could go a year out and reach for 220 or 230 out of the money calls. That is all I have for Wednesday's Apple Report. I'll be back tomorrow with Thursdays. Please click like, subscribe, and check out wickedstocks.com.